Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to be with you here this morning as we are going to be taking another fresh new look at the financial market using our basic tools. But before we begin the session, I would love to go through our daily routine to actually confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please kindly confirm this to me in the comment section by typing in hi. Typing in hi gives me a positive feedback that things are quite okay, and then we can start the session. So I look forward to your feedbacks in the comment section, and thank you very much as you do so. All right. Okay. Thank you very much. So what do we have here? Good morning, Ashitaka. I'm around here and glad to have you around with us this morning. Kubanito one. Good morning. Carlos. Aha. Good morning to you. Hello, my friend Leonardo Divi. Hello, Carrie. Good morning to you. Glad to have you around with us. Who else is here again? I think, okay, 528400089P. All right. And Ashitaka here again. All right. So I think with this handful of feedback, I think we are all on the same page. And in those, is on this note, I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we will be delving deep into the financial landscape, looking at things from a technical standpoint using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. So I encourage us all to grab your favorite beverages and get comfortable so you don't miss out on any of the ideas we will be deliberating on today. And so far this week, we have been monitoring four major assets in this community, which includes the USOILSPOT, the USTech100, popularly known as the NASDAQ. We also have the AUD which was introduced to us by Steamroller yesterday. And of course, my favorite asset, the XAUUSD, which in the last 24 hours, they've done fairly well, though the US All Sports seems to be the most moving asset at this point in time. So we are going to be looking at all of these assets in details and how we are going to be positioning ourselves strategically for the next move. And for those of you who are joining us for the first time, I'm very, very glad to have you around with us this morning and trust you're doing very well. I know you will be wondering at this point, what is it that we're really doing here? What is it that we're doing on the Extreme Speed Live? Well, let me quickly put here that as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of every New York sessions on a daily basis. So it usually kickstarts about 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. And it's important for you to note that my aim here is to equip you with the knowledge and skills necessary to make your own independent trading decisions. The more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And of course, for those of you who have been with me for a while, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on the assets we're monitoring so far this week, we shall be focusing on features from both the United States and the Australian economic docket. Now, in that regard, I would like to include the Australian economic docket into the scope of our purview. And if we do that correctly, we should be having something. It's loading up right now. Please, let's hold on a second. I wonder why it's taking quite a while before it loads up. So okay, while it loads up, I see a couple of comments. Bachero31, good morning. Luis Mihazes, good morning to you. Sincerely, I wonder why this is taking a while. Let me refresh the page and see what is happening. And let's see if it persists. So I'll redo the filtering again. So we have the US and the Australian economy, since we are looking at the AUD USD, and filter again. So let's see. Oh, finally it loads up. Glad. All right. So on our watch list so far this week, so for today, Tuesday, January 23rd, there are no high impactful event for today. So what I did was to include the mid-tier economic features, and in fact we have something to look out for. And later, much later in the day, the Australian economic feature will be releasing the Judo Bank Manufacturing PMI. And for those of us who do not know, this is a data that gives us an insight into the manufacturing sector of the Aussie economic feature, and is released on a monthly basis by the Judo Bank, and of course in collaboration with the S&P Global. Now this data here gives us an insight into the manufacturing sector, how well it's doing, and anything below 50 is considered as negative, while anything above 50 signals that the manufacturing sector is buoyant. So we will be looking forward to see what the actual data will be. Well, the previous data came in at 47.6, and we do not have a consensus. Yes, I'm of the opinion that this may show up on this calendar maybe a couple of hours into that event, so we can have something to correlates the actual data with. Now, we have another one. Simultaneously, we have the Judo Bank Services PMI. This one gives us an insight into the service sector of the Aussie economy, and is usually released by the Judo Bank in collaboration with the S&P Global as well, and its rating is also between 0 to 100, and anything above 50 is considered as healthy for the economy, and anything below 50 is considered as a contraction on that one. And the previous data here came in at 47.1, so we look forward to see what the actual data will be on that one. Then we also have the Judo Bank Composite PMI as well, which of course is a leading indicator gauging private business activity in Australia for both the manufacturing and services sectors. Now, this data as well, ranging between 0 to 100, anything above 50 shows that we have a healthy environment, while anything below 50 considered as a contraction in that regard. So we look forward to see what the actual data will be on that one too as well. Now, from the previous data, it shows that we really have not seen positivities in this sector, as they are all below 50. So let's see what the actual data will be. But one thing for sure is that the anticipation of this event will reflect on the chart as price action. And as technical traders, what we are going to be doing today is to sniff through the current market structure and see if we can identify patterns and structures that we can use to position ourselves for the next move. So with that being said, here we will be diving right into the business. And as usual, the first asset we will be taking, I'm very sure this is going to take some while again before it loads up. I hope it doesn't. So let's see how long it will take this time around for the US oil to open up. So it's taking some time. Hold on a second. Let me try to open up one more chart and see if this will take faster time to open. All right, finally, Lutz. Our first asset for today is going to be the US All Sport. And in the last 24 hours, we've seen how this asset had performed very well for us as we have been buying this asset since the beginning of the week. And for those who did capitalize on that one, I hope you moved your stop losses. If you did, you must have been taken out of this position with a reasonable amount of profit. But before we go into the details, let's run through what is really going on in this market at this point in time. Well, the week started with a consolidation as we saw price action trapped within that range around the $73.35 level and the $72.80 level to emphasize the level of uncertainty that was in this market at that point in time. And you know how we do it in this community. When we identify a range on the market structure, we do want to exercise patience and wait for either the breakdown of the support line to happen, giving us an opportunity to sell, or the breakdown of the resistance line to give us an opportunity to buy. Now, during our live session yesterday, I did emphasize the importance of this engulfing bullish candle after price broke down that support line, and that this could incite the idea of getting ready to buy. And in that regard, we had our buy stop order sitting above the resistance line of that range at the $73.35 level to capitalize on our first buy position for the week. And since then, we have been adding more buy position. Remember that we identified multiple levels during our live session yesterday in an attempt to maximize the potential of this uptrend move. So we had another entry at the $73.80 level. We also added another one at the $74.50 level, and finally we added another one at the $75 area, all of which in total ran into over 250 pips move before this bearish momentum came in. And if you indeed have moved your stop losses like we usually do in this community when price moves significantly well in our favor, you must have been taken out of all the buy positions at least with a minimum of 200 pips on that one, which is not bad to start the week with. And once again, congratulations to everyone who did capitalize on this opportunity. Now, as it is right now, what is going to be our plans as we get prepared for the New York session today? Well, there's been a lot of things behind the scenes that has been pushing the psychology behind price movement since yesterday's trading session. And in fact, factors such as concerns over global energy supply following a drone strike on Russia's Novatek by Ukraine that was on Sunday had also put a clog in the wheel of oil supply in the global market. And of course, we also saw disruption in U.S. crude production due to extreme cold weather contributing to the upward pressure we have been noticing in this market. Other factors include the situation in the Red Sea, which has also intensified as Iran-backed Houthi rebels escalate attacks on maritime ships, posing a risk of oil supply disruption. And of course, the United Kingdom have responded, as we can see, ongoing military actions by the US and the United Kingdom against the Houthis add to the geopolitical tensions, heightening the volatility in energy market. At this junction, and with all the factors supporting the ascent of oil prices, it's crucial that we exercise a lot of caution before making any informed decisions today, as we will need some significant confirmation to either join a bullish or bearish momentum in this market. Now, before we go into the details of what our expectations will be like for today, let's quickly refresh our memories as to what we saw at the beginning of the week. And to do that, we shall be taking a closer look at the daily time frame, where we shall have the privilege of having an holistic perspective into what is going on in this market. Well, on the daily time frame, we took into consideration the nature of price action since the month of September, and that's an historical data of about 4 to 5 months, and it's quite obvious that price action is bearish in this market. And after connecting the series of lower highs, we did have this beautiful descending trend line to work with. And you know how we use our descending trend line. Of course, when price remains below the descending trend line, we continue to look out for patterns and structures that support the idea of selling this asset. Now, despite the strong bearish momentum that started in the month of September, we saw how it became difficult for sellers to break through that area around the $68 and $70 zone at the beginning of the month of December of last year. And this old buy pressure around this area continued into the early days of this year, as we saw another buy pressure coming in as soon as price got into the structure, giving us a higher low as sellers were unable to break down the previous low. And with a further dissection of this chart, we notice the potential transition of price action into a reversal setup, which is looking more like a double bottom structure where the neckline of this pattern interestingly lines up with our key level at the $75 area. And what makes this key level quite interesting is the fact that it also shares a confluence with the descending trend line we projected earlier. Now, to validate this reversal pattern, we will need price action to break out of the neckline and retest it to incite an uptrend move. And in fact, if price breaks out of the neckline, it will also break out of the descending trend line, breaching that structure to emphasize that buyers are getting stronger. Now, as it is right now, and with fundamental factors supporting the ascent of US oil prices, I'm of the opinion that price may likely break out of the $75 level today. However, looking at the structure closely, you will see that in the last 12 hours, price action has been oscillating around the $75 area to emphasize the level of uncertainty at that point in time. And of course, this is not coming as a surprise, as I'm of the opinion that the anticipation of the upcoming crude oil stock data, particularly with the American Petroleum Institute later today, could be the reason behind this, as market participants may be stepping aside waiting for this data to give fresh impetus into what direction price will be going. So with the information we have gathered here on the daily time frame, let's scale down back into the 1 hour time frame so we can see how market participants have been reacting to this market structure since the beginning of this week, and most importantly around the $75 area in the last 12 hours or so. Now, scaling down into the 1 hour time frame, we begin to see things more clearly, and I did talk about how the week started for us here. And one thing for sure that is evident here is that price action did break out of that descending trend line we spotted on the 4 hours time frame yesterday, this one right here. Let me show you on the 4 hours time frame what this is looking like so we can be on the same page here. So now looking at the structure on the 4 hours time frame, after considering the impulsive move, remember that I did mention here yesterday that this pattern here could transition into either a downtrend continuation pattern. It's looking like a pennant here, and the Ponzi, if price breaks out of the resistant line of that range, we could be seeing an uptrend situation, which could be the beginning of a reversal pattern. So we saw price break out of the structure yesterday, and in fact, from a technical standpoint, when price action breaks out of a structure like this, we do expect that some point in time price may come back, retest the structure in an attempt to incite an uptrend continuation. Now, with this scenario here, we have about minimum of 150 pips move if price action will come back to retest the structure. So let's see if we have a situation that will support a retest of structure on the 1 hour time frame. Now, going back down into the 1 hour time frame, let's look at what is going on here. And in fact, due to the continued selling pressure around the $75 area since last week Friday, I want to first of all talk about the potentials of sellers at this point. Now, since price action has broken out of this as descending trend line highlighted in red on your screen right now, we saw that as soon as price tested the $75.40 level, we saw price drop to the downside, and then we saw another attempt by the buyers to break out of the previous high, which also failed at around that $75 level, giving us a series of lower highs, resulting into a potential reversal pattern. So this morning, what I did here was to consider if price does not break out of the previous high and goes ahead to break down the $74.50 level, which will be serving as the neckline of this reversal pattern, we shall be looking out for a short-term selling opportunity, maybe back into this descending trend line, where we shall be looking out for another wave of bullish momentum. And in fact, if price does break down the structure, retest, it could welcome more selling opportunities. So with this observation in mind, I had a sell stop order below the $74.50 level, which appears to have been triggered at those points in time. And for those of you who took advantage of that one, that well done to you. That shows that you really are implementing the knowledge you have been acquiring in this community. However, if you had missed out on that opportunity, well, let's exercise patience and see if the market will give us another opportunity to join that move. Of course, we expect that a retest is still possible at this point to join the downtrend continuation. So let's see how this is going to play out from here. Will price come back to retest the structure to incite the continuation to the downside? Well, time will tell on that one. So let's keep that option open. And for those of us who had sold at the $74.50, move your stop losses, secure the position, and let's see how the market will play out. I do not intend to add any more sell positions to this trade, even if the breakdown of the $73.80 level happens. Why is that? Well, the momentum for me is looking bullish from a technical standpoint, and in fact, if we consider what is going on behind the scenes from the Houthi attacks in the Red Sea, the United States and the United Kingdom airstrike on the Yemen base, and of course the shutdown of crude oil production in US, and of course the attack on Novatek in Russia, all of these are supporting a bullish idea, considering how they will be disrupting oil supply in the market. So because of these factors, I would not consider adding more sell position. And the only condition that will make me add more sell position is for price to break down both the $73 area and that descending trend line, retest of structure, welcoming beautiful opportunities to add more sell positions to our existing trade. Now, while we join this bearish momentum to the downside, please note that as soon as price action gets into this area between the $73.35 level and the $73 area, which shares a confluence with that descending trend line, please move all your stop losses, secure the current sell position while we wait and see how the market will react to this level. If buy pressure resumes and we have something like a reversal pattern, mark out your neckline and then buy the breakout retest of the neckline to join an uptrend move. But if price drops below, this could welcome more selling opportunities to the downside. Now, should price decide not to get to as far as the descending trend line and begin to build up some bullish momentum at this juncture, how do we intend to capitalize on the uptrend? Well, personally, I do have a buy stop order already sitting above the $75 area with the hopes that I want to capitalize on the uptrend continuation. And if price goes ahead to break out of the previous high, that is the highest level for this week, situated at the $75.40 level, I will be adding more buy positions to my existing trade. So these are the levels I will be looking out to buy today. So let's mark them out. And if price gets into the trend line, we look out for reversal patterns to join the uptrend move. So this is my simple view on the US All Sport for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5 to 10 seconds, see if there are any questions whatsoever before we move on to the next asset on our watch list. And you can use that time as well to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So, the next asset on our watch list for today is the USTech100, popularly known as the Nasdaq. And as you will see, this market has been consolidating since the beginning of the week, which further tells us that market participants are very, very indecisive at this particular point in time, further emphasizing the level of uncertainty in this market. Though we have our sell position triggered at this point, though we initially had a buy stop order triggered above the something $1,440 area, which of course unfortunately went into a loss before price action broke down the support line right here, and since then price action has been trading just around that support line with some iota of buying pressure around this area to emphasize that sellers are struggling to push price to the downside. And for me, this is a sign that profit taking activity is limited, and when we see a limited profit taking activity like this, it shows that major key players in the market are very, very hopeful about this commodity to rise further to the upside. So since the beginning of the week, price has been ranging actually between that area. Now the range has expanded into let me see if we can get this right, around the 17,310 area is the new low right now, as this has expanded the range into that area. So we want to be marking this level out on our chart, as we might be looking out for more selling opportunities if price action does break down and retest this particular area. So let me do some little adjustment here. I think 17,310 makes more quite sense. Or should we place that 17,300? Let me put that 7,300. Yeah, I think that will make more sense as it captures some levels here on Friday's trading session. So we have 17,300, and it's also a psychological level considering the round figure of that price. Now, we shall look out for more selling opportunities if price action will break down the structure. So the structure we have here is quite simple. We have a range after a phenomenal move to the upside. Remember, we were buying this asset throughout of last week's trading session as price action finds a phenomenal high at the 17,440 area. Now, for the sake of clarity here and for the sake of those who are not part of our live session yesterday, let me quickly run through the daily time frame so we can have an holistic perspective into what is going on that time frame. Now, right here on the daily time frame, this was what we were able to come up with when we were analyzing the structure during our live session yesterday. The first thing first was the fact that price has been bullish since the month of September of last year. And then we have a trend line around here which has played a major role in determining the direction of price action. And when we took a closer look at this trend line, we saw how at a point in time in August, this level was more of a buying niche, that is the trend line. Then fast forward to September, we saw price break down the trend line, retest the structure to maintain the bearish momentum, and the momentum continued into the month of November, but it wasn't that strong, leading to a final break above of that structure in the month of December. And since then, price has been trying to maintain this upward trajectory, leading to the breakout of our key level situated at the $17,000 area during the second half of last week trading session to incite a new high. Now, from a technical standpoint, whenever we have this kind of ascending trend line on our chart, we obviously want to be looking out for patterns and structures that supports the idea of buying that particular asset. And with a breakout of a key level at the $17,000 area, it is technically expected that price may at some point come back and retest the structure as a result of some profit-taking activity to incite an uptrend continuation. Now, as it is right now, if you look at what has been going on here since the beginning of this week, you will see that buyers appear to be losing the steam that brought them to this point, and this is inciting the possibilities that we could be seeing some profit-taking activities that may do a retracement back into the structure to anticipate the uptrend move. And in fact, if it breaks down the structure, it will be a beautiful opportunity to join a decline to the downside. So this is what we are looking at from the holistic perspective. So what we did now was to scale down into the lower time frame to see how market participants have been reacting to the structure since the beginning of the week to give us an idea into what possibilities this market holds. Now, scaling back down into the 1 hour time frame, we begin to see things more clearly as the new week began on a strong bullish note. As you will see right here, the week started at around the 17,350, and as soon as it tested that 17,440, we saw a strong barrier for sellers as every attempt by the buyers to break out of that structure was met with strong resistance from the sellers, pushing price to the downside and in fact expanding that range into the 17,300 area, which is now serving as the support area since the beginning of this week. Now, like I said earlier, we already have a sell position triggered, and based on the continued buy pressure here since the later part of the New York session yesterday, I'm of the opinion that we should move the stop loss for this sell position back into break even. As you will see, sellers have been struggling to break down the 17,300. So please move your stop loss to break even at this point, and let's see if the market will break down the 17,300. Now, the breakdown of the 17,300 retest of structure will give us an opportunity to join the decline to the downside, where we will be having our TP target somewhere around both the ascending trend line and that key level at the $17,000 area, dovetailing to about 290 pips to catch here. And if price goes ahead to break down and retest the structures, we shall be looking out for more selling opportunities. So that is the only condition for us to sell the USTech100 today, a breakdown retest of the 17,300. However, if this buy pressure around the support zone here, which is between the 17,350 and the 17,300 persists, we may be seeing a situation that may lead to the breakout of the resistant line at the 17,440 to incite an uptrend continuation. And in fact, I'm of the opinion that the inability of sellers to break through the zone, for me, is a positive sign that market participants are still hopeful and positive about this uptrend continuation, maybe based on some data which we are not yet open to at this point in time. So because of this observation, I'm thinking that is there a way that we can actually maximize the potential of this bullish move by buying even before the breakout of the 17,440 happens. Now, with the scenario we have here, where we have a range between the 17,350 and the support line here, I think this could transition into a reversal pattern where this 17,360 could serve as the neckline of that reversal pattern. That is, continue buy pressure around the 17,300. Now, if this gets broken to the upside, this could welcome bullish ideas, but I wouldn't be jumping in right away, but instead wait for a breakout retest of structure on our lower time frame to join that uptrend move, and then having our stop losses right below the structure, dovetailing to about 55 to 60 pips thereabout, or 65 pips thereabout, depending on where your entry points. Then we can now have a buy stop order above the 17,440 to maximize the potential of this bullish move. So it's a simple setup we have here on the USTech100, where we shall be looking out for buying opportunities at the breakouts retest of the 17,360, and of course selling opportunities only at the breakdown retest of the 17,300. So I do encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. And as usual, I will be taking the next 5 to 10 seconds to see if there are any questions before we move on to the next asset on our watch list. Okay, so I see your comment. Oluwa Django, good morning to you. You're Nigerian, I guess. That name sounds familiar. Abdel140780, good morning to you. PK78, good morning to you too. And we also have Storm in the house. Storm is asking, what about the AUD/JPY? Well, AUD/JPY is not amongst the assets on our watch list for this week, so we are not taking AUD/JPY this week at all. If you want us to look at an asset, I keep reiterating that if you do want us to look at a particular asset, ensure that you are part of our first edition for the week. That's on Monday, where you have the opportunity to tell us whatever asset you want us to look at. So Storm, let's say on Monday, if you really want us to look at the AUD/JPY, and then you can share it with us on Monday. All right. Okay, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall move right into the next asset on our watch list. So the next asset on our watch list for today is the AUD/USD, which was introduced to us by Steamroller during our live session yesterday. I'm not sure if Steamroller is in the house at the moment. If you are, let me know in the comment section. All right. So in our analysis from yesterday's live session, we had some couple of levels that we did identify here, and of course trend lines, which we said we will be using to guide our trading decisions for yesterday's trading session. And in the last 24 hours, a lot of development had happened, especially from the Aussie economy calendar. And though the Aussie is looking as if it is edging higher at this point, trading around that 0.6825 area, and the improved NAB's business confidence might have contributed to underpinning the Aussie dollar at this point, as you will see some continued selling pressure around this area. Now, the Aussie dollar saw support from improved National Australian Bank business confidence and the country's shares market performance. However, the US dollar strengthened in recent times, impacting the AUD/US dollar despite lower US Treasury bond yields. Now, the headwind for the Aussie may include speculations about potential early interest rate cuts by the Reserve Bank of Australia, fueled by subdued consumer confidence and employment change figures. Australia's sovereign wealth fund chair, that is Peter Costello, noted earlier that signs of inflation moderation, but highlighted the distance to reach the RBA's target band. So at this point, inflation still decreasing though, but remains significantly outside the 2% to 3% targets the NAB as projected. So as it is right now, we are at a limbo as price still remains consolidating within a range. Though we had this range identified during our live session yesterday, where we saw price action confined within the 0.66135 and the 0.65825 level to emphasize the indecision in this market. However, we added another factor into this range, which we said we will be using to guide our trading decision, and that is this ascending trend line spotted at this point. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that support the idea of buying an asset. And the only condition that will make us to sell the AUD/USD is for price to breach and break down the ascending trend line. Though we saw price break down the ascending trend line yesterday, I think during the later part of the New York session yesterday, as we saw here, and then price climbed back up again, triggering this buy stop order at the 0.6595. And I do hope you moved your stop losses. If you have done so, you must have been taken out of that position at a worst case scenario break even. And as it is right now, it appears that the bearish momentum is getting stronger, leading back into the support line of that range we identified yesterday, welcoming the idea of looking out for selling opportunities below the 0.65825. So having a sell stop order below the 0.65825 makes quite a lot of sense, and then we look out for more selling opportunities at the breakdown of the 0.65675, I think 0.65675. Okay, so let me just put this right here. So if price goes ahead to break down the 0.65675, which happens to be the lowest point price action has been for this week, we look out to add more sell positions to our existing trade. So things are looking bearish at this point. As you will see, buyers are finding it difficult to break out of that zone between the 0.662 and the 0.66135. The same thing also happened about 4 to 5 hours ago. Buyers found it difficult to break through, and if this continues, price breaking down both the 0.65825 and the 0.65675 will welcome more selling opportunities. And if this momentum continues to the downside, please note that we have our key level for this week at the 0.65300, which is closer to the ascending trend line we spotted on the higher time frame. Now, for the sake of clarity, let me quickly show you what things are looking like on the 4 hours time frame as regards to this ascending trend line. So we talked about this, I think it's on the daily time frame, I guess. Okay, it's on the daily time frame. So we talked about this ascending trend line on the daily time frame, which has been supporting the bullish idea in this market since the month of October. And when price got into the ascending trend line last week, Thursday and Wednesday, we saw buy pressure resume around that area. Now, as it is, like I was showing you on the 1 hour time frame, if we continue to sell in such a way that price breaks down this ascending trend line, it will welcome more selling opportunities in this particular market. So let's see how the market will play out. I just needed to show you what things are looking like on the daily time frame so you can be on the same page with me when I explain things on the lower time frame. So as it is right now, this is the ascending trend line we spotted on the daily time frame right here. So we shall see if price will break down, retest the structure. A breakdown retest definitely will welcome more selling opportunities, and if price goes ahead to break down the 0.65300 area, we shall be adding more sell positions to our existing trade. So this is how we are going to be selling this asset today. So we keep on looking out for selling opportunities as sell pressure persists in this market. Now, in as much as we're looking out for selling opportunities, we cannot ignore the potentials that buyers could come in. You know how we do it in this community. We always try to keep a balanced perspective to whatever decisions we are making. Now, in as much as we look out for selling opportunities, what are the chances that buyers can come into this market? And if they do come in, what are the things we want to see on this chart that will make us feel comfortable changing our bias from bearish to bullish? Well, first of all, I would like to see price climb back above this ascending trend line to make me feel comfortable buying this asset. Then secondly, take out all the sell positions at the 0.66135, and if a breakout of the structure happens, then definitely I want to feel comfortable buying this asset. Then another breakout of the 0.662 will welcome more buying opportunities. So placing a buy stop orders above these structures makes quite a lot of sense as we look out for ways to capitalize an uptrend if price climbs back above the ascending trend line. So this is my simple view on the AUD USD. I guess Steamroller is not in the house today, unfortunately. So if you have any questions on the AUD USD, feel free to let me know in the comment section. So I will take the next 5 seconds due to the time restraint I have before we move on to the next asset on our watch list, and you can use that time to mark out these levels on your chart. So I see your comment, Bubai. I hope I pronounced that correctly. You're asking about the XAUUSD. Sure, we are going to be treating the XAUUSD in a moment. It's amongst the assets on our watch list, so obviously we are going to treat it. So stay tuned in on that one. All right. So in the absence of no questions, let's move right into the next and last asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. It has been quite a choppy start to the week as price action, if you will ask me, has been ranging, giving us an insight into the level of indecision in this market as price kept is caught within the 2032 and the $2,020 area since the new week has begun. And of course, yesterday we had a couple of levels and trend lines which we said we will be using to guide our decisions. And for the fact that price action was sitting above this ascending trend line from yesterday's live session, we were looking out for buying opportunities, positioning ourselves just right above the 2030 and the $2,032 area to capitalize on this uptrend move. Price did break out of the structure as you will see here, but it moved about how many pips thereabout? I think about 50 70 pips thereabout, and I do hope you moved your stop loss. If you do, you must have been taken out in a worst case scenario break even. Now with the situation we have right now, with the situation we have So, with the situation we have right now, what is going to be our plans? What is really going on behind the scenes that has been making this market to behave this way? Well, during the Asian session today, we saw how this market saw the introduction of deep buying activity, enabling it to recoup some of its losses it made since the beginning of the week. Remember, the week started on a bearish note, dropping into the $2,020 area. But the deep buying activity during the Asian session allowed the gold to gain some traction. But as it is right now, we begin to see some bearish move, leading to the breakdown of that ascending trend line. Now, well, the deep buying we saw this morning may be attributed to support from the escalating geopolitical tensions in the Middle East and concerns surrounding China's sluggish economic recovery. Additionally, a relatively subdued US dollar influenced by a softer tone in US Treasury bond yield could further bolster this commodity as it is. Now, despite these factors, a substantial upward movement in gold prices still remains uncertain right now due to the reduced expectations for an early Fed rate cut. Now, this shift follows several hawkish comments from Fed officials throughout the course of last week who all emphasized that it was premature to contemplate interest rate reduction at this point in time. Now, consequently, market participants have tempered their anticipation for aggressive policy easing in 2024. In fact, the odds right now in favor of a rate cut is currently at about 45%, as against the 85% at the beginning of this year. That's a tremendous turn down there, and it appears that market participants are not sure of what to do, and this is quite evident in this market. As you will see, price action has been consolidating within a tight range since the beginning of the week to emphasize the level of indecision going on in the market. Now, given this landscape and considering the events coming up later in the week, we have the S&P Global publications from the United States. We have the GDP data for quarter 4 from the United States later in the week. We also have the core PCE as well. Of course, these are high impactful events, and I'm of the opinion that market participants may want to avoid any aggressive bets and stay aside, waiting for fresh impetus from these economic features. Now, with the situation we have here, what is going to be our plans for today? How do we intend to hold our ground for today? Well, let's look at what is going on the daily time frame so we can have an holistic perspective into what is going on here. Now, looking at the structure from a broader and long-term perspective, what we did on the daily time frame was to take into consideration the nature of price action since the month of October, which of course shows that the market has been on a strong bullish momentum, evidently depicted with this ascending trend line to work with. And of course, you know how we treat our ascending trend lines in this community. As long as price remains above the structure, we want to look out for buying opportunities. And to make our trading decisions easier for this week, we have our key level just right around the $2,005 area. As you will see, immediately price tested the structure on Wednesday, Thursday of last week. We saw buy pressure resume again from that area, and in fact this level had been a strong buying niche since the month of November, as you will see here. Prior to that moment, it was a strong selling niche, so this level here had played a major role in deciding where price will be going. Now, for this week, we are looking at two possibilities, of course, that price may continue to respect the ascending trend line and continue the uptrend, or price breaking down the ascending trend line and the key level at the 2005 to incite a downtrend move. Now, we have a simple setup here on the 4 hours time frame, which further explains what things are looking like on this current structure. And after considering the nature of price action since the month of December, we had a beautiful demand zone where, as you will see, since the month of December, our sellers have found it difficult to break through this area. And every attempt by the sellers to break through has always been met with strong resistance from the buyers, as you will see right here. And in fact, during last week's trading session, where we capitalized on that strong bearish move, as soon as price got into this area, we saw another wave of bullish momentum. Now, in addition to this, is that since the new year began, that is the year 2024, it has been more of a profit-taking activities, as you see price continue to find lower lows and lower highs, hereby transitioning into what I will term a descending channel. You will see after connecting the series of lower highs, we have the resistant line of the descending channel, and when we connected the series of lower lows, we have the support line of that descending channel. And as it is, yesterday we saw price test a little bit of that descending channel before this bearish candle came in. Now the question is, how do we intend to position ourselves? Well, if you would ask me, considering the fundamental factors, that is the geopolitical tension, which supports the appeal for safe haven assets such as the gold, it makes quite a lot of sense to look out for buying opportunities. And this, coupled with the fact that price remains above three parameters on this market structure. The first one is the $2,005 level. We also have the demand zone, and of course price still remains above this ascending trend line we spotted. It looks like buying this asset makes a lot of sense. But mind you, the reduced bet for interest rate cuts may be limiting the upside of these assets. Hence, we need to also consider the potentials that sellers also have in this market. Now, scaling down into the 1 hour time frame, what are we going to be doing to sell this asset. Let me talk about the selling potentials here. Now, the first thing first here is for me to sell, I would like to see price break down the $2019.50 level, taking out all the buy positions here before I can feel comfortable selling this asset. Of course, you can see what has been going on here since the beginning of this week. Buy pressure. Every attempt by the sellers to break through has always been met with strong resistance from the buyers, as you will see right here. And of course, if you look at the nature of the wick of these candles, you will see that it reveals that sellers are not settling very well into that support line, giving us signs that buyers are still strong in this market. So for me, I will feel very much comfortable selling at the breakdown retest of the structure to join the decline to the downside. However, is it possible that we sell even before the breakdown of that structure happen? Well, we will need something significant to do so, something like a breakdown of this ascending trend line and a couple of series of lower highs and lower lows on the lower time frame, further emphasizing that sellers are getting stronger before jumping into that bearish move. But let's see how the market will play out. If we can see series of lower highs, we can easily capitalize on the downtrend before even the breakdown of the $2019.50 level happens. Now, talking about the bullish expectations, I still expect that the level around the 2032 and 2030 could still be an area to look out for buying opportunity, considering the fact that it is sitting above that ascending trend line. And if price continues to climb new highs, we look out for more opportunities to buy at the breakout of the $2039.50 level. And I think we also have something at the 2055. So this is what we will be looking at to buy the XAUUSD today. So let's see how this is going to play out in the next 24 hours, and we shall be here again tomorrow to review how well these assets have been doing. So our center of focus for today's trading session on the XAUUSD is right within the 2032 and the $2020 area, where depending on the direction of the breakout will give us an idea into where price is likely going for this week. So this is my simple view on the XAUUSD. I hope I made myself clear, and if you have any questions or you need some further clarification at some point, feel free to let me know in the comment section below. So as usual, I'll take the next 5 seconds to see if there are any questions before we go ahead to round off on today's Extreme Speed Live session. I see you, Steamroller. Glad to have you around. I guess you came in late today. We were able to take on your asset, the AUD/USD. I hope you didn't miss out on that one. All right. Wish you the best today, Steamroller. In the absence of no further questions, I want to assume that we are all on the same page. And in fact, it has been a wonderful moment with you guys today, as I really enjoyed every single time spent with you. We were able to take on 4 financial assets today. We took on the USOILSPOT, the USTech100, popularly known as the NASDAQ, and of course we took on the XAUD/USD, which was introduced to us by one of us here, Steamroller. And then we also took on the XAUUSD, popularly known as the gold spot, all of which we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. And I do hope you are able to mark out these levels as illustrated during our session. And if you did, well done to you. All you just need to do right now is to exercise patience and allow the structure to mature before jumping into any positions. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And with this understanding in mind, you want to ensure that you have a well-defined risk management strategy in place to mitigate against any sudden pullback that may happen on the trades we are taking. For those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of the subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand how things works and eventually be able to use the information you gather here to make your own independent trading decisions. So on this note, I want to wish you all the best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and in fact prepare for tomorrow's trading session, which promises to be another exciting one as we all look forward to the GDP data from the US economic docket. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.